case you want to join me live on the stream, the link is also here. Let me share the link on the Zoom here, so they can also be able to join me. I would appreciate if you can join me, to be honest, because we have limited time on our Zoom services, while we have unlimited time on our streaming services. So if you want to join me there, it would be nice if you could also join me. Yeah. So what's time now? This is 21 minutes, and we have oil inventory coming up by 3:30 p.m., which is about 2:30 p.m. here, and they are estimated to have about 0.9 million barrels shortage. And the last week was minus 1 million barrels. So it's gonna come out approximately in the next it's gonna come up approximately in the next 7 minutes. That's when it will come up. I hope you can see my screen very clear, right? So it's gonna come up in the next 7 minutes. And based on this is the situation of the market as I speak. The situation of the market is technically, or when I say technical, I'm not trying to make technical chart, like it could also be part of it anyway, is a bit bullish. And from what we have been trading and analyzing on oil, we are looking for what could support us to place more investment on oil. So if the report happened to be more shortage of supply, as APL reported last night, then we could support our analysis to keep buying oil. So in the next 7 minutes, oil is going to come out. People may be asking us, what is crude oil inventory? Crude oil inventory talks about the report that measures the quantity of supply on oil every week. It talks about the quantity of supply, like tradable instrument, tradable oil, like tradable quantities, not those in reserved. So that is what most oil investors uses to measure the quantity of supply, and they can influence demand. You cannot see it exactly like this in forest. So oil is one of the asset classes can know the quantity. So when there are more supply every week, that's most likely going to be that the price of oil may go down because more supply are coming in. When there are lesser supply every week, they're most likely that the price of oil is going to go up because it can trigger demand. It's very simple. So we use this parameter to trade oil as much as every other parameter. That's why every day around the New York session will come on live to let you know about the crude oil stock report, the quantity of supply that is available. And this report is released by AIA, Energy Information Administration of the United States, it's released by Energy Information Administration of the United States every Wednesday by 3:30 p.m. The GMT, it could be 10:30 a.m. It could be, I think, 10:30 a.m. in the New York time. And in your own area where you're watching from, it could be different time zone. So because of that, it has up to 70% impact in the market. It has up to 70% impact in the market. If you use it alone, you have chance of being more successful in trading crude oil than when you don't use it. If you use it alone, you have chance of being more successful. That is about crude oil inventory. So in the next 5 minutes, it's going to be out, and we see what's going to be the outcome. So I think we should focus on it first before we navigate into gold investment and trading. Then on my own analysis here, they are expecting a shortage of supply, which I would like. So if the report is more shortage, that means the price of oil is most likely gonna go more up. As we could see here, the price is most likely gonna go more up. You know what I mean? I hope you can see my screen. The price is most likely gonna go more up between this price we are watching now. The price is most likely is gonna go up within this price we are watching now. People are trying to join my stream. Let me allow you in. Yeah, somebody want to join my screen. Yeah. So the price is most likely gonna go up within this area. We are currently on 66. This is when we analyze $1,000. You know, it is still here on my screen so that you know what we are trading. We are not speculating here. Or since Monday we paste it here. The same screen I'm using to analyze to you. $10,000 you're trying to make on oil. Then you could also see that the one of Brent is also here. So together we are expecting 10,000 um 250 pips, which is gonna give us estimation of $10,000 profit. Then on the risk side, we are putting a limit of 100 pips to 150 maximum, which is like 20%. Yeah, that's what we're targeting on the risk side. Yes, people may be asking, are you sure it's guaranteed? We have risk, we have our reward. This is how I trade my own market, and sometimes I digress, but sometimes I come back to it. I want to stick to this my method of trading. If you're trading with me, we should be able to be knowing how much we're going to be making every day or every week or every month before we invest into a particular asset classes. That is why we are one of the best and one of the best guys you can ever trade with. Let me know if you have a question within this time, because we have 4 minutes to know what the report is. Some of you are already oil gurus. If you have a question, let's entertain the question within the 4 minutes time before the market can trigger. Can you all hear me? Yeah. So any questions so far from you guys? Okay. So on my own logic, if the report is positive, if the report is positive, which is small supply, the market may come down a bit, but I'm not gonna close my buy. I will leave it. Yeah, it may come down a bit. It may come down to 58. Yeah, the lowest it may highest come down is 57. But if the report is negative, meaning there are more supply, obviously the market will go up because investors are expecting more oil to go up. Then it will support our analysis to push the oil to 62.50, and that will give us the target of $10,000 profit. Then if you want to multiply this, let's say you're a big guy, you have a lot of money, you should make more than this. Maybe you have a good amount of capital. Yeah, then it can make more. If you have small amount of money, you know how you can manage your lot size, then it will help you. You know what I mean? Yeah. So that's my own judgment. So why I don't want to close my trade is that when you place a trade, don't always be rushing to close it. Allow it to trade, because there are other factors that could impact the market. Do you understand? Some of you are quiet today. So now, going further, let's go back to the market to see what is bringing. Okay, you could see my screen, of course. So let's go back to the market to see what is going to be the report. We have 1 minute to go. So let me click on here. Because I'm using double screen. So we have 1 minute to go. We have 58 seconds to go. 58 seconds to go. Yeah. So currently we have 58 seconds to go, and let's see what the report will be. 58 seconds to go. We have about 22 seconds to go. Seven seconds to go. Somebody say, I would like to chat to you on WhatsApp. Yeah, I can later in the day. Do you have our WhatsApp number? Okay, the time is up now. Oh my God, perfect. 6.9 million. Guys, we are certainly sure we're going to hit that 250 pips. 6.9 million barrel supply. Oh my God, 6.9 million. Yeah, so let me refresh this page. 6.9 million. So guys, this is the reason why you have to be here. This is the reason why you have to be here. This is the reason why you have to be here. So there's nothing point again. So make sure you stick to your buying position if you want. It's not that I'm trying to impose it on you. I'm not advising you to buy. So it's up to you, but I'm giving you all the reasons why you need to buy. You know what I mean? So make sure you stick to it. So basically, we have 6.9 million shortage of oil. So if you like, you doubt me, but you know in your mind that you are doubting. 6.9 million. Yeah. So we have minus 6.9 million barrel. From the last week was also minus 1 million barrel last week. So we're gonna continuously hitting on oil. In fact, we may adjust our analysis based on that. And then when we go to oilprice.com, it may also confirm more information about it. So definitely we're gonna hit this target on oil. Any questions so far? So any questions so far? So if you have about $100,000 account, yeah, you can still use the same volume you are using. Maybe you can increase it a bit. You should make about $20,000 profit. That's 20%. Those on CFD. Yeah. If you use 0. Yeah. Let me calculate it properly. $20 times. Yeah, that's $10,000. So if you use three lot size, that would be three times. That would be $30,000. No. What am I doing? What am I doing? So let me calculate it very well. $30 times 500. Okay, that would be $15,000 profit. Then those of you that are using maybe small amount of money, you're using $1, which is 0.10 times 500. Of course, that's $500 profit. If you're using 0.5, 0.5, 0.5 times maybe 500, you're gonna make $50 profit. Yeah. If you are using maybe 0.2, that's $2. That's 20 cents times 500. You're gonna make $100 profit. So it's just up to you. Yeah. I'm not teaching you lot size. So if you are new here, you don't know anything about trading and jump into you at your own risk. You need to learn how to trade. We are speaking language of trading, not language on your bank account, not language of money. So that you won't think that when we say $20, we mean that you're gonna put $20 capital. This is language of trading. People who are traders know what is called volume, they know what is called lot size, they know what is called leverage, they know what is called margin, they know how these things can interrelate into their trading. So I don't have owe you any explanation to explain further to you. If you join us for free and you don't know anything and you don't want to know anything, so they know how they can be able to. When we talk about SL, they know what stop loss. They know when we talk about pips, they know what pips means. When we talk about target, they know what that target means. They know what they expected to gain. Yeah, that's why you need to learn some of the terminologies and some of the things involved into trading, so to understand it properly. Yeah, to understand it properly. So these are the things you will stand to gain as the case go further. So any questions so far, guys? It will not affect. It will not affect it much. I'm a stubborn trader. I don't usually like many things to influence me. Stick to one particular position. If I'm buying, I'm not gonna change it. Sorry, I'm so hot. Sorry, I'm so hot. Let me remove the jacket. I'm so hot. So that's why I don't like to come to office with a suit. I dehydrate quick, so I don't know. My body always need water. So what I'm saying is this: what was the cut today? What was the cut today? Where is it? Where is it? Where is it? It's okay. It's coming later. I don't care. That's one thing I have told you about trading. Stick to one particular position and allow it. Let the market follow your rule, follow your position. Don't follow the market. Let me go. This is affecting my eyes as well. Do you understand what I'm saying, Kelechi? Don't don't let market. Don't follow the market. Let the market follow your position. How will the market follow your position? Take one position, analyze what is you understood, and stick to it. So when it's your own turn, the market will come to that direction and give you the profit that you want. When it's another person's turn, the market will go in that direction and give them the profit that they want. You know what I mean? Yeah. So now, like I told you, because I'm already buying oil and I'm expecting more profit. So if market happen to drop further, I wouldn't bother much again. I will see like allow sellers to start cashing out until my own turn reach, then I will cash out. You don't understand. So that makes me to maintain stability in my mind instead of jumping like following market. If you go up, I follow it. If you come down, I follow it. So I don't really like that type of trading. It even affect your mental health and make you feel a little bit of stress. Um, yes. So it can even stress your mind. Stick one place. There are a lot of things that can influence the market. A lot of things. Yeah, there are a lot that can influence it. So something influenced it to come down. Was it not last week? The same thing influenced it to come down also have influenced it to go up. Different things can influence it. Yeah, I've learned that thing for a long time. That's why I maintain stability in my mind when it comes to trading. What are they trying to talk about? 4%. That's what they're forecasting against 2.5% of the previous one. Yeah, lower interest rate can only benefit those in the United States. Yeah, like internally economic structure, it benefit them more because they won't pay higher interest rate. And what is different to 0.25%, although which is big for big company as well. Know what I mean? While higher interest rate will benefit the investors from diaspora, like big foreign direct investors will like it. But oil is a global commodity that something that can influence oil may come from China. Another thing that influence it may come from maybe even Libya. Another thing can influence it may come from Iran. You know what I mean? Something that can influence may come from where you don't even expect. That's what I mean, Kelechi. So it has a lot of things that can influence it from somewhere. Then when you come to the news, you now see that Oyen refused to do this because of once something that happened either in Ukraine. You see the distance between Ukraine and the United States. This word, please. Yeah. Now, what I have to ask? What is the essence of what is the topic of the meeting? Do you understand? So the topic matters most. Then you now know whether that topic is gonna have any impact, let's say on oil, on commodity market like oil. For example, they want to sign. Yeah, yeah. You know that there's a little bit ease of the tension on tariff hike on China that pushed the price of oil up. So that is came in when they imposed, I think, 100% tariff on China, and China, I think China retaliate. Then they now have to like waive it. So that's the reason why the market went up. Why the oil market? That's one of the reasons why the oil market went up back. Do you understand? So we're gonna also check along to know what's gonna be the impact on this one. But what I'm trying to say that investor psychology, they will most likely, I can see the market is actually going up bad, very much. So investor psychology is there to play that I would like to invest at a lower price and cash out at a higher price. It's as simple as that. You see this one I'm seeing now, I'm gonna follow it up. For example, if Donald Trump and China agreed on trade deal that's favorable, it will be favorable to the economy of the world, and it can also push the oil price more up. You don't understand? It could push oil price more up because the instability of oil price is mostly influenced by war in between Ukraine and Russia, the Middle East crisis, and the trade policies of the United States that's causing it like this. Do you understand? So now what I'm trying to hear that for now, let's cash out first. Buy a share. Okay, today is Wednesday. Buy whatever you want to use to keep yourself up till their own meeting come. Then, if you want to continue, we continue. We're expecting 200 pips so far, and we have gotten 100 and something pips. So we expected 250 pips on each. We have gotten 100 and something pips. So let's just keep the fingers across. We need it to get to 62. Then we now know that we have met our target for the on oil, which is a target of which is a target of 500 pips each. Let's see whether we achieve this target. Is Let's see whether we're going to achieve it. Yes. Because we always talk about on our page, our target is 1,000, 10,000 to $100,000. I'm not sure any of you have made that money on a single trade. Have any of you made it on maybe even though on 1 month? Who else have made $10,000 on 1 month using that projection? But have you achieved it on the pips? Oh, but on the value on it in dollar, you have not achieved 10,000. I see. Okay. 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 For those of you that are learning from us, let me repeat it again. What is inventory report? Inventory report talks about the quantity of oil available for trading. It's a global report we usually use to trade oil every Wednesdays. This report comes out from EIA, Energy Information Administration of the United States, and they take data from all the oil producing firms globally to publish for us every Wednesday the quantity of oil available for trade globally. Understand my language? Quantity of oil available for trade, not those in reserve, not those in reserve. Do you understand? So now, anytime this report comes out, and anytime this report comes out, and there is more supply in figure, it means the price of oil may go up. Sorry, there are more supply in figure, it means the price of oil may come down. So anytime this report comes out, there are lesser supply of oil, the price of oil may go up. So it's one of the parameters we use in measuring movement of oil. So especially when we have consistent shortage of supply every week, it may impact the price to go up. And when we have consistent more supply every week, it can impact the price of oil to drop. Now, this afternoon, this is the report. We got minus, they said decrease by 6.9 million barrel of oil from the previous week. Then you can get this report from forestfactory.com. There's other economic news, you can get it so that you can be able to get the actual date, the actual date and time when it will be released. That's the only essence of Forest Factory. So you could see it here. If you study data analysis very well, you can also be able to get more data and extract it, and you can use Excel to do your math on data analysis of this to be able to study the entire data, how this thing has been supplied, like is overall data. For a long time, you can be able to extract this data into Excel sheet and analyze something. Then you see the quantities, how it's been supplying. If you want to get like 1 month, 6 months report or 1 year report. So from here, you can be able to arrive at a conclusive data that there are more supply or there are lesser supply. And there's also area we can get demand matrix of oil. Then we usually get it from the news, and those news was also some information from the AI. We used to do it every 3 months. So the next one we're gonna do on demand may be probably December. Yeah, we're gonna do demand metrics on oil. Right now there are a little bit higher demand, but there are more supply than demand. So currently you see minus 6.9 million, which is, and they were expecting minus 0.9 million, which means that there are more supply, there are lesser supply. It came out more than what they're expecting. They were expecting shortage, but it came out to be more than what they're expecting. And because of that now, we now assume or believe or analyze anything they want to qualify the statement that the price of oil may most likely continue to go up. Do you understand? Those of you that are new to us, the price may most likely going to go up. This is for your own learning, and it's good that you learn it live. So the price of oil most likely going to go up, and that's also why we are buying the oil, and we're expecting SL around 58 point, I think 58.50, and that's where we're expecting our SL on oil. So one thing about learning with us is that you'll be trading together with us. So those of you that are learning from us, if you want to place a trade, we can as well help you to check what you're trading. Don't just be assuming that everything is right. Mhm. You mean looking at the chart, you mean knowing demand zone on oil. Demand zone on oil is easier to know it from the support zone. That thing you hear about support and resistance talks about where buyers want to buy, where sellers want to sell. So anytime demand consistently or anytime support consistently occur, you can also interpret it to be like a demand area where people most likely want to buy oil. For example, check this particular place now. Here was lowest, and it happened around July. Do you understand? Now here is second lowest. Here now is second lowest. That's about the market came down like 4 months, 4 months away. No, not even July. It happens around April. This was April. Yeah. Now this is another lowest. So check this price 56. Check the price 756. So you can even see that okay, this area is like an area for buy. Then another area, another way you can know, zone is something like this. You see this area now, zone, something like this. Area that market always most likely reverse back. It can be called zone. So looking at it, you see that there's a zone, especially when it has occurred repeatedly for many times. Mm. Do you understand? Yeah. So from there I can know. But where we can know demand metrics, the figures of oil, you can get that from EIA. You can get that from the website of the publish about reports of that datas of oil, no demand. Like earlier this year, we got demand. We got information about 50 million, 50 million order to buy oil from the New York Stock Exchange. It was published. I saw it online. News was reporting in, which was the highest in 10 years that time. I think that was earlier this year. Like, oil is traded on contract. People were like 4 to 50 million position were placed. So now they were talking about more people buying oil within that time. The oil may end up going more up. These are the area can be able to know much demand. By the news, you can know demand. But supply is already there. Yeah, supply is the quantity, the product already. You can know the quantity easily from the body of EIA or API. Mm. Okay, so we will be able to talk further using teaching you guys how to invest on gold. We'll talk further teaching you guys how to invest on gold. How to invest on gold. Those of you that are new to